The Indian market's comeback rally that began in April this year has lost steam over the last 2 months, with the benchmark Sensex and Nifty indices down around 6% from their recent highs. Foreign institutional investors have intensified drawing funds from domestic equities as US Treasury yields leap to their highest levels in over a decade. The medium-term outlook also remains bleak for the markets amid risk that the Israel-Gaza conflict could escalate to a wider Middle East region. Analysts, however, suggest using the current weakness to accumulate quality large-cap stocks in pockets which still hold value.
I think it's a very simple strategy that there is a lot of divergence as far as sectors are concerned and companies within the sectors also in terms of the movement, and we do feel that there is a lot of value in the market even right now at this juncture as well. When you look at quality companies, especially in the large cap space, we continue to be very bullish on large cap banks in the private sector, chemicals, autos, and even IT. I think this is absolutely the right time to pick these up. So the answer would be to stick to quality, to stick to large caps, and look for value wherever you feel that the risk versus reward is balanced out. I would go ahead and buy in those sectors in these weaknesses.
The coming assembly polls and the general elections in 2024, meanwhile, are the next key triggers for market trajectory next year. JP Morgan analysts have upgraded Indian equities to overweight from neutral as increased government spending ahead of national polls is expected to support consumption. Use near-term correction as an opportunity to add and leverage positive historical seasonality to general elections. Indian markets have generated positive returns ahead of the elections. This could play out during the first half of 2024 as well, they said in a note. Experts, however, also flagged the risk of a sharp retreat in the markets due to elections. If the current NDA government led by BJP does not return to power with a majority, Indian equities could see a sharp 25 to 30% correction, according to Chris Wood of Jefferies. Wood, however, believes the markets would still bounce back. If there was a repeat of what happened with the surprise election in 2004, markets could correct 25 to 35%, but you should buy this dip, he said at the Business Standard BFSI Summit on Monday. Thus, while equities are likely to remain tumultuous in the run-up to the election season, any intermittent weakness is a good opportunity to accumulate stocks. Today, on October 31st, market action will remain stock-specific as investors will react to the Q2 results of Adani Green, TVS Motors, UPL and DLF, among others.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's moving from employee to employer. Business Standard.